Good morning, students. How are you all? Hope you all are fine. Okay. So again, third time we have received this lockdown. So we are compelled to learn on online classes, isn't it? Okay, no problem. We have completed 10th lesson. Not completed. 10th lesson we were learning. So here we have already completed one method, isn't it? Straight line method. The second method is written down value method. There we have completed 10 problems, isn't it? So we will continue the other 6 problems here, okay? So first of all, you should know what is the meaning of this method. Written down value method. From the name itself, the value will be written down. So which value? The book value of the machinery or the asset, fixed asset, will be written down. That means it will be coming less. But under the straight line method, the depreciation amount will be the same throughout the lifetime of the asset. But here the value will be decreasing. It will be diminishing. So we can call this method as diminishing balance method. Diminishing balance method. From the diminishing balance, the balance of the asset will be getting reduced. On that balance only we should calculate the depreciation amount. Okay, here the first year's depreciation will be deducted from the total cost. Okay, so the next year the value after deducting the depreciation is called the book value. So second year we need to calculate from the book value of that machinery, that asset, but not on the original cost. First year alone we are calculating the depreciation from the original cost. So it is not called original cost method, written down value method or diminishing balance method, because the rate of depreciation is applied only on the written down value or the diminishing balance, but not on the original cost. Okay. So here the many advantages and disadvantages available on this method. First we can say the main advantage is there is a logic. Okay, because the balance here, what is the logic? Because first we are calculating the on the original cost, then we are calculating on the written down value. Because so what is happening, the amount of depreciation is getting reduced. Okay, depreciation get reduced. So otherwise in the original cost method, depreciation is same throughout the lifetime of the asset. Okay, so here the depreciation should get decreased only. Okay, depreciation will get decreased, but on the other hand, the repairs and maintenance, the amount that we spend on repairs and maintenance of the fixed cost will be increasing. Okay, towards the end lifetime of the asset, but this will be less at the beginning of the years. Okay, here it is getting reduced when the lifetime of the asset is getting near, but here it will be increasing. So when we add these two amount, we will get the same amount. almost same amount. But in the other method, in the original cost method, the depreciation is the same, but the repairs and cost, maintenance cost increases. Okay, towards the lifetime of the asset it is increasing, but this one is same throughout the lifetime of the asset, so it will not get tallied. That is why we say it is the logic one. Okay. Then we can say it is equal charge against income, we can say, because equally it is charged. Okay, depreciation will be less, repairs will be more. So it will be throughout the lifetime of the asset, it is equal only. Okay, it is not increasing or it is not getting decreased. Okay. Then, what is the disadvantage? The main disadvantage is that we cannot reduce or we cannot write off the asset completely. Okay, we cannot write off, but here in the original cost method, the asset will be written off fully, zero. At the end of the lifetime of the asset, the value of the asset will become zero, but that will not happen in this written down value method. Okay, then another one, they will not consider the interest. In this method, they never consider the interest. What is this interest? If the amount that we spend in the purchase of the asset, if we have invested that same amount in some other investment, we will earn some amount as interest. Okay, this one is not at all considered in this method. Both the method we have not considered this one. Here, very difficult to calculate the rate of depreciation. But in the straight line method, it is very easily we can calculate the rate of depreciation by applying the formula. Amount of depreciation divided by original cost into 100. But it is very difficult to calculate the rate of interest under this method. Okay, so we have learned this one, straight line method and diminishing balance method. So now we will see how the problems are done. Okay, we will do the problems. During this online class, I have to complete all the chapters. Okay, so better you have to attend all the online classes, then only you can learn, because the same chapters only will be coming there for BCom if you go for higher classes. Okay, I will explain now the written down value method. See the 11th problem. Okay, an asset is purchased for rupees 50,000. The rate of depreciation is 15% per annum. Calculate the annual depreciation for the first 2 years under diminishing balance method. So, here they have asked only the annual depreciation. Okay, we have to write statement. First question number, then heading. Okay, statement showing amount of depreciation. First asset on when the date is not given. Okay, otherwise we should write the date also. 50,000 less depreciation for the first year. We should calculate. Okay, 50,000 into 15%. Here the two zeros should be cancelled. 15 into 5, 75. 20, 7,500. So how much? 42,500. Then less annual depreciation for the first 2 years. Depreciation for the second year. Now we should take this. This is the diminishing balance or written down value. Okay, so 42,500 into 15 by 100. Here 20, here 20. Now we should multiply. Okay, 425 into 15. You should not write here and multiply. In rough column you have to multiply. In order to show you, I am multiplying here. Okay, 5 5s are 25. Balance 2. 10 plus 2, 12. Balance 1. 20 plus 1, 21. 5, 2, 4. 5, 7, 3, 6. 6,375. So how much you will get? 5, 9 minus 7, 2, 4 minus 3, 1, 12 minus 6, 6, 3. Okay, this one the book value. If they have given the year, we can write on which date. Okay, at the end of the second year. Okay, understood? 12th one. Boiler was purchased on 1st January 2015 from abroad for 10,000. Shipping and forwarding charges amounted to 2,000. Import duty 7,000. Expense of installation 1,000. Calculate depreciation for the first 3 years at 10% per annum on diminishing balance method, assuming that the accounts are closed 31st December each year. Okay, same method. Calculation of amount of depreciation. Rupees, particulars. First number, then heading, then column. Okay, then only you have to start doing. The boiler is purchased on 1st January 2015. How much we have purchased? 10,000. Then add shipping 2000. Then import duty. All these expenses related in the purchase of assets. So we should add these expenses along with the original cost to get the original cost along with the purchasing price. Okay, 7,000. Installation 1,000. So how much we are getting? 10, 12, 19, 20. Okay, now we should calculate the depreciation. We have purchased on 1/1. The accounts closing on 31st December. So no problem. Complete 1 year we are getting. How much is the percentage? 10%. So 20,000 into 10 by 100. So here 1 0, here 1 0. We will get 2,000. So next year 18,000 opening. Okay. Here first year. Depreciation second year. Okay. Here for 18,000 we should calculate 10 by 100. 1,800. Now less depreciation third year. Now see, for 16,200 we should calculate 10 by 100. 1,620. 8. 14,080. This is the book value. Here we can write first year 15. This one 2016. This one 2017. Okay, 2017 book value on 31st December 2017. This is the value. Okay. So we have completed 2 problems. The remaining problem we will learn in the next class. Okay students, thank you very much.